Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Bitcoin. We saw a pretty decent move today to the downside, but on the daily time frame, this was nothing more than a wick. So we're gonna look at that. If you guys like the content, please go ahead and subscribe to the channel, and also give the video a thumbs up, and also check out the Telegram channel in the description below. So if you follow this channel, we've been talking about our move to the upside over the last several weeks, where we averaged around, I think it was like 90 something dollars per day on average from the move in March to our peak. And then since then, we've basically been moving sideways. And we know that cryptocurrency is not always exciting. There's a lengthening cycle. I mean, the lengthening cycle theory would dictate that we're going to spend a lot of time likely just kind of staying humdrum in a region, building out support in that region, and then testing our local high several times before finally breaking through it. And this is where the FOMO would then enter the market. But one of the things I wanted to look at was, today the price of Bitcoin dropped down to $8,900, but we're still holding the 50-day moving average if you don't look at wicks. So if you don't count wicks, which we don't count wicks on this channel, we're still holding the 50-day moving average as support. I don't think that this line will necessarily hold as support. It's certainly possible that we drop down to, down to say the 20-week moving average or the 50-week moving average, the 20-week being at 8,300, the 50-week being at 8,700. It's possible that happens. But a very bullish scenario would be for us to hold the 50-day to fairly shortly pop back up to the 20-day, not that the 20 day is that important, and then maybe retest 10,000 sometime later this summer. So this is obviously the bullish scenario. If we test 10,000 yet again, I think each subsequent time we retest it, there's a higher probability that we're going to break it, because the long-term bears are starting to realize, okay, well, maybe there is this bottom. Maybe we're not going to go back down and test those lower levels. I do want to say something. I made a video earlier today. It was more of a joking kind of a video, and mainly for the people in the Telegram community, about the CME futures. I don't think that the 4-hour futures is important at all, and I said that in the video, but I know that a lot of people don't watch the whole video, so they just look at the title and think that I'm saying that Bitcoin has to drop to $3,500. I don't think Bitcoin's going to drop to $3,500. If you were in the Telegram chat, you already know this, and if you watch the whole video, you would know that as well. I don't think we're going to drop to $3,500. I could realistically see Bitcoin dropping to the 200-week moving average at $6,000, and the 300-week moving average as kind of like our ultimate bearish scenario, which is around $4,000. And we did drop down to the 300-week on this wick here, down to $3,800. Note the 300-week moving average is continuing to move up. But I mean, the 200-week is ultimately where I would think most of our weekly candles are going to hold a decent level of support if we drop back to that region. But even if we do drop back to that region this market cycle, don't discount the fact that we could see another shorter-term speculative bubble where we come back to a high and then break that multi-year downtrend. Okay, we're going to break it at some point. If whether we break it this month or 6 months from now isn't really that important. But I do want to draw your attention to a couple things. So first, we know that moving sideways, we talked about this in a recent video. This is a good thing in the long term for Bitcoin. You don't just want to go straight up, because if you do, like you did in the summer of 2019, you're just going to go straight back down. If we can establish some level of support on the way up, like we've been in this region here between, say, like $8,600 to $10,000, we've been in it so far for 47 days. If we can continue to stay in this region for another month or two, this is going to then continue to build the case that we're going to break 10,000. If we break it if we break it shorter than that, if we jump to 10,000 next week and then go to 12,000 the week after, there's a good chance we're just going to come straight back down. Okay, so it's all about building out layers of support, so that people get into the market at those price levels. They're not buying in, watching the price of Bitcoin just crash, capitulating, and then leaving crypto. I think it's a good thing if we can stay within this band, and note that we are holding that 50-day moving average. So if we can continue to hold that, then you could see us start to move up again in the short term. So this is a very real possibility. If we break it, look for the 50-week as our next region of support. Now, I wanted to talk really quickly about the weekly moving averages. So The 50-week moving average is starting to go down. The 20-week is starting to level out. Some people might, or I think a lot of people, they look at the moving averages and they don't really anticipate what's about to happen. But you can easily do this if you just, and I'll show you what I do. If you just go to the date range, you take the weekly moving average. You go, for this one, let's look at, say, the 50-week. So what was going on 50 weeks ago? We were here. We were at our weekly candle right after our local all-time high at 14,000. And this price, the bottom was at around 10.8, and the top of the candle anyways was around 11.4. So the reason the 50-week, it was already flat. Okay, the 50-week was already flat. The reason it's starting to decrease is because it's starting to ignore. It's now ignoring this candle here where the price reached 14,000. You can see the bottom was 11.3, and we've completely ignored these candles over here now. So as we continue to march forward in time, we're going to start ignoring each subsequent candle. And these candles are all currently higher than our current candles. Since this is the case, if the slope was already flat and you're replacing a higher price with a lower price, then it leads that the slope is going to decrease, which is what it's doing. Let's look to see what the 20-week moving average was doing 20 weeks ago. Or let's see what price was doing 20 weeks ago. So we'll go from the candle, we'll go 20 weeks back. Okay, so we were basically leading into this shorter term speculative bubble. So the 20-week is starting to flatten out as well because it's going to start excluding these candles here, which could be higher than the ones we print in the coming weeks. If that is the case, you could see the 20-week moving average go to the downside in the short term. I don't think it's going to be sustained very long because, fast forward another 6 weeks, all of these candles are going to be ignored, and we're just going to basically be including these candles and then the next 4 candles we print. So I think ultimately speaking, over the next couple months, at some point, we're going to see a cross of the 20-week and the 50-week, which is a bullish indicator, I think. I mean, it's not anything official, right? It's not like it's a golden cross where you see like the 50-day go above the 200-day. It's not the other leading indicator where we're just saying, okay, we need to be above the 20-week because that typically is our, historically speaking, the 20-week is our support in a bull market. But it's just noting that it's usually a positive sign in the short term when you see these shorter term averages going above longer term averages, because it means we're getting more bullish. Prices is really starting to step up the ladder. So I hope that makes sense. So if you want to anticipate the moves of moving averages, whether weekly or daily, it's fairly straightforward. You just look to see what was going on that many weeks or days before, and then you can maybe start to anticipate what's going to happen in the short term if, based on what the current price is, what the price is that you're starting to exclude, and whether that's above or below, the current moving average level. So I hope that makes sense. Keep in mind that if you are finding yourself capitulating on daily wicks like this, and you can see this daily wick here, so let me remove this. So this daily wick here went down to around 8,900. But again, on the daily time frame, we're still holding the 50-day moving average as support if you just look at the body of the candle. If you're finding yourself as being the person capitulating on these candles, you're just trading on emotions, you don't really have a plan, then please check out my website, intothecryptoverse.com, and sign up for you can get a subscription. It's a monthly subscription, but you'll get access to the dynamic DCA strategy that I use, which is based on the risk metric. It helps assign like how you enter and exit the market just based on mathematics like historical volatility, diminishing returns, lengthening cycles. It takes this into account and then just spits out a single number that you can use to dynamically DCA in and out of the market. It also tells you key things like the best day to buy Bitcoin, historically speaking, the best hour of the day to buy Bitcoin, statistically speaking. So if you're interested in that kind of stuff, then check out the premium list at intothecryptoverse.com. I think it's really useful. And every single week you'll get a premium video as well as a premium report and access to a Google Sheets dashboard with live risk levels, logarithmic regression analysis, and a few other things. So check that out. And if you do sign up, I'll see you in your inbox fairly soon. I think that's mostly what I wanted to talk about for the video, just covering, how to anticipate weekly moving average moves or daily moving average moves, reiterating the fact that staying in this region between, say, the 50-week currently and 10K, if we can just stay in this region for a while, I think it's an incredibly bullish sign. And also don't get discouraged if we're not at 20K next month. I think that to get to a sustainable 20K, I think that is the case. It's probably going to take another 18 months. Now, there's definitely a chance we can go up to 20K and get rejected by it several times, just like we have with 10K. So come up with a plan where we're going to be here for the long haul. It's going to take us another few years, probably at least I would say 3 more years. So just buckle up, have a plan, and then you'll watch this plan unfold over the next several years. Go out and have a life. Don't just stare at the price of Bitcoin every second of every day, because you're really not doing yourself any favors. Just ignore these moves, come up with a plan, stick to it, and forget about the rest. So I hope you guys enjoyed the video. Remember to subscribe, check out the premium list if that interests you, and I'll see you next time. Bye.